Best day in a month, Josh Brown. Legit? Is this legit or is it false hope?
Well, it's hard to say because we've had multiple episodes like this in the past where it looked like finally there would be something concrete, and then the weekend goes by and nothing really comes of it. And so, you know, it's hard to watch this play out over 18 months and get excited every time. But
this feels a little different this time, maybe.
Okay, so I think the market agrees with you. So let's take a look at the ACWX. This is the All Country World Index, ex-United States, so only global stocks. This is up 1.75%, give or take today. Call it almost 2% on the day. You almost never, ever see that these days. This has been a laggard, but now it looks like it wants to take out a double top at about 47. I'm referring to the ETF of the index. And, of course, that would be very bullish. We're flirting with a one-year high in global stocks ex-US. Take a look at transports, up 3.8% over the last 2 days. Incredible bounce. Take a look at IWM. That's the Russell, another big laggard, up 3.5% in 2 days. And then the banks are ripping. So if your premise is the market thinks this time is different, I will agree with you based on what I'm seeing in price action.
Yeah. So, Kate Moore, yes. S&P is about 1% or so away, a little bit more than that, away from its all-time high, 3,027 and 98. Byron Wien was on the network earlier, said the market has upside. It may be limited upside, but it can go above 3,000. I mean, given where rates are, do you agree?
Yeah, I do agree with Byron.
We're about to go higher here?
I think there's a lot of possibility to go higher. Look, we talk a lot about positioning, and I think that's a place we really need to focus on. The market is skeptical, and one of the reasons why we're ripping higher on, I think, what is kind of like a trade-light deal today. We had some decent data. We're still ahead of earnings. We don't really know what companies are saying yet for their third quarter and the guidance they're giving us for next year. But we had just enough good news and the market's higher. Although I have heard from a lot of traders today that that the street has been putting on hedges against the strength in the market. I think the skepticism is there, and because of that, the pain trade is still a little bit higher.
Byron Wien's other point was, yeah, you can go higher. It's limited, though, because earnings growth is going to be weak.
Yeah, I don't think anyone is expecting earnings growth to be phenomenal. You know, one of the funny stats I was looking at was at this exact time last year, expectations for global U.S. and European earnings growth for the forward year ahead was within 10 basis points of where it is today for the forward year ahead. I mean, we have a lot of placeholder earnings numbers in place. And so I think we should expect downward revisions. I don't think we're going to have a phenomenal earnings environment. That said, I'm not in the camp of a big earnings recession.